All right, welcome back, everyone. So once again, as you can see, I have my partner here, Mr. Caleb Canazzi from Buffalo Turnkey. How are you, Caleb?
Good. How are you?
Good. Welcome back to do another update, Buffalo Niagara Falls investment update on behalf of our database, our investors, and just to get some high level what's going on, going a deep dive into your market and let's see how it goes. All right. So
Sounds good.
thank you, Caleb. So let me go ahead and share my PowerPoint real quick. I'm gonna run through my 5 minute high level slideshow presentation. Then after that, we will do some Q&A as we always do, and just to get the pulse of the Buffalo market, what's happening in the Buffalo market in the past few years. What's the anticipation for the future? What are the investment opportunities for our turnkey investors from out of state, mainly from California, our investors, and why still a good opportunity to have some portfolio in the Buffalo and Niagara Falls, so the so-called Midwest cash flow market, if you will, for the lack of a better term. So, all right, Caleb. So I'm gonna get started real quick. So it's a Buffalo Niagara Falls is a turnkey cash flow market. Zillow's top housing market for the 2 years running, 2023 or 2024, is number one. So yeah, Buffalo is the radar is people get to know about radar, and we can talk about briefly later on the presentation. But there's more competition in your submarket, Niagara Falls, and you and I know why. So is people, the mainstream media is learning about the investment market here in Buffalo Niagara Falls. So it's getting more challenging to get the deals. So Buffalo Niagara Falls, again, we got some. I know some people thinking, oh, on paper, this kind of property does well. What's the reality? Well, we can talk about the reality. And Caleb here, as a sales consultant for Buffalo Turnkey, you're going to uh, holistically, you're going to using transparency, going to share with everybody the real deal. I mean, does this paper return is a reality, or is a myth, or is a hype, or whatever? So we're gonna dive a deep dive. So we're gonna leave no stones unturned, right? As always, right, Caleb?
Sounds good.
Yeah. Okay, so Midwest, Buffalo Niagara Falls, I know it's upstate New York, but it's a typical Midwest market type of market. So it's an older C class, C plus class homes. Correct me if I'm slightly wrong. The good value is a low price point, and typical pricing, give or take, single family home, turnkey, cash flow rental properties you guys promote are typically $70,000. A duplex, a little bit more than 100,000. I could be a little bit off. The price point is probably higher in the past few years, but I'm just giving you a high level. So you can correct me later on the presentation if I'm way off on my projections. Triplex around 150K, and fourplex is around a couple of hundred grand. So the numbers, is off the chart, but less appreciation than the growth markets in the South and Southeast, perhaps. But it's a strong cash flow market, so that people understand that. So investors understand that. So this is a typical performer as a single family home, and $70,000. Investor can put 20% down payment, like $21,000 total out of pocket, which is amazing, very low cost of entry. And then if you can collect rent for like $1,000 gross rent, you minus all the debt service and the expenses. At the end of the day, positive cash flow right here. And most important of all is all the numerical metrics really, really works. Rent to value ratio is 1.4%. Anytime you get a 1% rule, 1% rent to value ratio, that is a very, very attractive number in terms of positive cash flow. And the capitalization rate is about 9%. Cash on cash return is 9%. Total return on investment at the end of the first year, at least 22%. If you calculate the annual net cash flow plus the 3% appreciation projection, and then some tax benefits, and then some renters gonna pay down the debt. on a systematic basis, that is also a quantifiable result. At the end of the day, your annual net cash flow plus the projected conservative appreciation rate plus tax benefit. So all this gross equity return 4,700 divided by the down payment around 21 grand equals 22% total ROI the first year at the end of the first year projection. So just a projection. So those numbers to me is very attractive. So again, another value benefit for buying in this Buffalo Niagara Falls market is that if someone have a W-2 salary of only 50 grand, which is kind of rare because our investors come from California. We have some six-figure income investor come from San Francisco Bay Area, which most of my clientele. So their income is a lot higher. But again, if you buy from somewhere else, if you live somewhere else, if you have a low W-2 salary, you can still buy in this Buffalo Niagara Falls market. So you can't say that to too many market in the country. So if you have if someone have 20 to 25% down payment, and if they have good credit, they have a debt to income ratio is less than 50%, then they'll qualify to get financing. So we have investment lenders. We have several lenders that are willing to lend the property that you guys are promoting, your off-market opportunities. And some of our lenders have no loan limits, so they can finance a property as low as 60 grand. Because nationwide, very few lenders, if any, are willing to finance on these low-cost rentals. So consequently, Caleb, many of our investors are able to scale their Buffalo Niagara Falls portfolio fairly quickly within a matter of a few years. Some of our investors are able to buy 3 or 4 properties so far. Some are able to buy 5 or 10 rental properties. So easy to scale because the down payment is so low. So the more you can scale, the more you can achieve cash flow, then ultimately financial freedom. So Caleb, as your Buffalo Turnkey, our wholesaler, our turnkey provider, if you will, you guys have repeat investors, buyers from Canada, across over the US and overseas, such as Israel, Middle East, UK, Australia. So you have repeat buyers for many, many years come back to buy more and more and more through your turnkey off-market listings. So Buffalo Turnkey, Caleb, is a family-owned business, is a multi-generational family business because your father, Keith, started the whole business 3 decades ago, and you and your siblings and your in-laws are part of the whole family business, property management, rehab team, everything, turnkey. I mean, so you guys, your in-house property management do the rehab, do the property management, do the tenant screening. You know what neighborhoods to buy because you've been in the market, you vetted your market for 30 years. You guys know every street corner, every neighborhood. So you guys pick the right properties for our out-of-state investors. So we feel very comfortable about that. You can't say that to too many turnkey providers in other Midwest markets. And of course, over time, you guys will do ongoing maintenance and repairs, do everything for our investors. So our investors, mainly whether we own 5 or 10 properties through buying rental through you guys, typically they only spend 1 hour per month in managing the portfolio because this is, it's just turnkey, just so easy. Anyway, again, the numerics are very, very attractive. Cash and cash returns, almost double-digit. Rent to value ratios more than 1%. Vacancy, is manageable. Okay, we can talk more about that. Affordable entry point, or someone needs like 20 grand, $20,000 total down payment plus closing costs, and they can able to finance a property. The most cheapest property you have is financeable. So easy to scale. So again, our investors, I would say, I could be wrong, Caleb, you could correct me, but I would say 1/4 of your investors that buy your off-market rentals, they're doing financing, 20 to 25% down payment, traditional investor financing. The other 25%, they use all cash to buy because, people have deep pockets. They love to buy your type of properties in Buffalo Niagara Falls. And the other 25% or more, they use their self-directed IRA to buy rentals, the hard assets inside their IRAs. So when you combine all these strategies, investors can scale pretty quickly to achieve financial freedom using cash flow and even a little bit of appreciation. Now, we're not going to talk about this, this weekly listing. This is a Excel spreadsheet that I have access to on a monthly basis. You send the updates to me, but because these numbers are so hard to see, we're not going to go over line by line, obviously. So, investor, evaluate when they evaluate your market, they have access to this spreadsheet. But it's not so hard. So from a high level, Caleb, I could be wrong, but you have two categories. You have properties in Buffalo, and you have property in Niagara Falls, which is like 30 or 40 minutes away, Niagara Falls, in upstate New York. So I would say 1/3 of the Buffalo properties, you sell it to owner occupied buyers, and those are very, very good, attractive returns. And the remaining are rental properties. They are in various stages of repair, right? You guys doing renovations and put it to a turnkey status, then you sell it to our retail investors from out of state. In Niagara Falls, typically we have more inventories. In Niagara Falls, they're a little bit cheaper properties that cash flow a little bit higher, a little bit lower quality neighborhood than Buffalo, but the cash flow was higher. But yeah, so you have a mostly, I would say 50% single family homes, 70K, 80K range, 20% of duplex that you guys have available in any given week. And some are on various state of repair, and some are reserved by the investors, some are under contract, as you can see right here. So suffice to say, this kind of property you guys are presenting, ultimately they cash flow. Okay, they are, that's how it goes. So the bottom line is within your market, uh, Buffalo Niagara Falls is one of the portfolio investors can do. High cash flow, low entry point, reliable turnkey property management, client service the whole time, one-stop shop, scalable portfolio. So that's my high level PowerPoint. So before we gonna go through Q&A, I thank you for your patience, Caleb. So you have any kind of thoughts on some of the slideshows that I talked about? Any corrections or necessary?
Not too much. I mean, we could probably get a little bit more than 25% of people paying cash. We get, especially like foreign investors, because they have a difficult time qualifying for bank financing because banks don't like to lend to foreign investors, except for Canada. The Canadians are able to get it pretty easy. But like people like in Japan or China or yeah, the Middle East or like France and stuff, they're pretty much all cash buyers. So you'd be kind of surprised how much cash like people bring in from Buffalo just buying strictly cash.
Yeah.
But yeah, yeah.
So Caleb, I mean, I'm very intrigued by it. I mean, some of the investors watching this video for the first time, I think they're pretty impressed. I mean, why? Buffalo Niagara Falls is a little neck of the woods, like you know, uh, not very well known. It's not a major metro. It's not like New York City. It's not like New Jersey or whatever. But you're in a little neck of the woods, and how come? I know the answer, but I want you to say it. Why people from all across the US and all various countries overseas continue to buy these properties from your off-market portfolio? Just
There's a lot of reasons. So one is yes, that cash flow that we talked about, and there, just like rental income. I mean, you're not going to get that in a lot of spots, especially when you're looking at like foreign, like in the UK. Some of these people don't like make any money basically with the rents, and they just hope for some appreciation of their buildings. So when they get like good, really good positive cash flow, they're happy. And not only that, we've also seen a lot of appreciation as well too. Like even just in the past 10 years, property values have probably doubled. So and a lot of your investors who bought a while ago, like they've sold their properties and made some pretty good money, and we've helped them like sell properties too, or we've even bought back a few of them too for much higher numbers than we sold them for too. So it kind of depends. And Buffalo, it's not like the smallest city either. Like we got the Buffalo Bills. You see us in the news every once in a while. We got some nice. We're kind of like a medium city. So it's not New York City. That's the biggest city in New York, but the second largest by population is Buffalo. And Buffalo and the surrounding areas, if you include the whole metro, it's almost 1 million people. So it's not like that small of a place combined. So it's a nice little spot, and the cost of living here is a lot better now that jobs are getting to be a lot more remote than they used to be. A lot of these companies that realize, hey, we could have remote workers, they want to hire people in Buffalo. And the reason that is you don't have to pay people as much because the cost of living here is way less than and like other places around the not just around the United States, but even just like if you take comparison of New York City, living there compared to Buffalo, I mean your costs are tremendously high. Even like our electric here is not even that much because Niagara Falls supplies something like a quarter of all the electric for New York State, even. So we have very cheap electric. We have a very cheap cost of living here. Everything's like very good. So a lot of companies like Geico has come here, been a big player because a lot of their agents are remote and they can do that. So it's a nice little medium city where like we got benefits of a bigger city like with a lot of but then we also don't have like the traffic that other these major cities have, where you could go from downtown Niagara Falls to downtown Buffalo in 20, 30 minutes, and there's very little traffic, pretty much ever, except like sometimes when there's rush hour or like an accident or something. So there's a lot of, I mean, I love living in Buffalo, and I talk to a lot of people who feel the same. It's a pretty nice
Mhm.
spot to live, and our weather is great. I mean, it's never too hot. I mean, it gets a little like if you're a snowbird, we do get snow, but I mean, it's a great place to live, and people are starting to recognize that.
Yeah, yeah, that's right. That's why Zillow, Zillow, they named Buffalo, the number one housing market 2 years in a row. So that's the reason for that. So yeah, I mean, Buffalo Niagara Falls is no longer under the radar, especially for investors. But you guys been doing it for so long. You guys are multi-generational. Your father started the whole company more than 30 years ago. Now you and your siblings are running the family business. You guys are very transparent. You guys have very unique model. Okay, let me get this straight. You guys so invest in your local market. You know every block, every neighborhood. So you identify stress properties initially. You buy this stress properties at a deep discount in a good area, then you use your rehab team to rehab the property for to turnkey standards. Then you add on little bit of profit margin, and you create a very good, decent selling price to our out-of-state investors. The number works is a win-win situation. So how you guys are able to consistently go into a specific neighborhood on a consistent basis, find the great deals, distress homes, buy undervalue, fix it up, rehab it, very, very low cost because you have relationship with the local Home Depot, whatever. You can buy the materials at a much lower cost than normal. So you pass on the savings to retail investors like us. So at the end of the day, when you put the property for sale to your off-market listings, they're not on a multiple listing service. So your company only cater to specific network of investment groups such as ours in California and other networks you work with, and you'll be peak buyers from all over the world that consistently come back to buy more properties. So that tells me that you guys have a extremely high integrity track record. You guys perform over time. Many of our investors, they keep telling me over the years, the past few years, their property has increased in value more than they thought in appreciation in the past 3, 4, 5 years, like you said. So not only cash flow, but they're getting a little bit of appreciation also. So it's an extra bonus. So how do you what's the value add? I know the other Midwest markets, the other wholesalers in other markets, I don't mean to say anything bad about them, but they just simply don't have. I trust your network. I trust your wholesaling team. But for any investors from out of state, they have to be careful if they're going to go through the other Midwest market, trying to find a turnkey provider. But, it's not the same. Not all turnkey wholesaler in the Midwest market are the same. I know the properties are very, very old, but you guys, the property you promote is have a lot of good bones, have good foundations. You renovate the property correctly, your property appraised, your property appraised correctly, okay? And then when you do the inspection, when the investor do the inspection, in the inspection report only finds some minor cosmetic repair or necessary, then you guys go out of your way to fix up any cosmetic repair after the inspection report is done, then they close escrow. So financing is doable, right? I mean, lenders are willing to finance your small purchases, so that provide amazing value add. So I know I talk about a lot of things, but what are your thoughts about what I just said?
Yeah, yeah. So, yeah, you could get appraisals and everything on the properties too, and most people do. You have to when you're doing bank financing too, and they're always appraising above value. And some people are like very surprised with sometimes like how much more they appraise for. So if they don't appraise for value, then the contract you would have a problem or something there. And so it's not like it's contingent on the financing when you do the financing. When they're cash buyers, they typically, I mean, these people kind of know what they're doing. A lot of times they bought many properties, so that they don't really need that extra assurances, and they got we're giving people a fair price on the properties too. So as far as just kind of what we do. So for maybe some newer listeners, yeah. So we will take care of like basic items on what most investors, especially if you're out of town. I always suggest to get a property inspection because if you're not coming in, you kind of want to know what your property is looking like and the condition. And sometimes we miss things too. It's easy to miss, especially if we bought the property and there's already an existing tenant. Sometimes it's a little bit harder to schedule things and get things done when the tenant's there because they got to move their furniture or something if it needs like new like underlayment or flooring or carpets or whatever. So it does take a little bit of time, and we're trying to deal more in volume than anything else. And to speak to like how I think you mentioned a little earlier too. There was a lot of number of things going on, but I think you were mentioning like how we consistently find properties, and it's really just it's our network. If you sell a lot of properties and have been doing it for so long, you build we got a very good network and a lot of good contacts, people just bringing us deals. We're very rarely buying a property on the market, maybe like one a year compared to we're just buying pretty much everything off market or at auctions, properties that you have to pay cash to. So it limits people's buyers. So there's a lot of different avenues that we have to do that. And then, like you said, we fix them at a lower cost, and we're able to like other people who like flip houses, they need to make like a lot of money per flip because if you're only doing a few a year, you need to make. But if you're doing the volume we're doing, we're trying to make like ease of business, just like kind of go. And yeah, we have a great reputation. We're not here to like do it like I'm planning to be in real estate like the rest of my life basically. So I'm here to stay. So if anyone were to have a problem, that just call me anytime.
Yep.
I'm gonna answer my phone, answer the email. We're
Mhm.
We're not abandoning people. Once the sale's done, it's not just like, oh, see ya, bye. We're around, so and here to help.
That's what I hear from my investors, right? I check the pulse of my investors that purchase through your team over the years, and most of them have some good things to say. So that's why we are consistently doing business together over the years. So now the next question I'm going to ask is you don't have to give an exact answer, but some investors, especially new investors watching this video from my network, they're going to say. I know you guys sell older properties, a lot older. I know they're turnkey and everything else, but with the price point and all that, C class, C plus class neighborhood, what are the typical, I know this is a very tough question, so do your best to answer. What are the typical vacancy rate from, within a given year? What's the percentage of the vacancies? What's the maintenance of what's the percentage of the maintenance and upkeep and vacancy? So just tell me about that because, yeah.
So it really depends based on what kind of property you buy. So I like to, when I like talk to investors too, suggest certain properties too, because some properties I would say are more risky, and the other ones are not. And so not every property is the same. And then the ones that tend to be like you might think of higher like turnover, those are ones that are going to have a higher calculated return on investment just to kind of make up for that fact. So a lot of people, what I see is they put 10% of the rents collected in typically for like maintenance costs. So you save that over time. Like yeah, some months you're not going to have anything, and other months might be a little bit more, and it kind of depends. And then people do like 3 to 5% for vacancies, and it's really going to depend just on the tenants. I mean, you get some properties that the tenants been there like 10 years or 20 years or something crazy. Like they just are gonna be there the rest of their lives, basically. They have, and then you get other tenants that they're 1 year, especially like for one bedrooms where you might sign a year lease, but uh then you like are like, oh, they're getting married, people have families and they want a bigger place. I mean, they need to move out. So there tends to be more turnover with like 1 bedroom, 2 bedroom, like units than there would be with like a single family home. So I like the single family homes personally a lot, but I mean, people make good money on doubles, triplexes, fourplexes, however you look at it, especially doubles when they're like 3 bedroom, 3 bedroom, like an upper or lower something rather than like a 2 bedroom and a 1 bedroom or something. So there tends to be a little more turnover. And if your investors have questions on any certain property, I'll definitely like tell it as it is basically, so and kind of help guide them. And but at the end of the day, like the buyers, they make their own decisions. So I mean, we're selling every property for what we think is a fair value on there. And then as far as one advantage of having the price point like lower, you see other markets like in Texas, like Dallas and stuff, where they're just building a ton of properties over there, and now their markets are not doing as well. It's becoming more of a buyer's market over there just because they've built so many units and other properties that the supply and demand it's shifting. Whereas Buffalo, you can't build a property for $70,000. There's no competition there. And anytime a property like burns down or something, like there's just less supply of these properties because the alternative is building a property here for like each square foot is like $250 a square foot. So if you're building like 1,000 square, like it's not even a big place. A lot of times you're paying $250,000 for that. I mean, it's going to be a new build, but there's people that need these kind of these properties, and because of that you're a lot more secure that it's not going to be kind of like these other markets where like the supply and demand is completely shifting. There's only so many houses that you
Yeah.
for this kind of price.
Yeah. So, yeah, Caleb, what I hear you saying, correct me if I'm wrong. What you just said is, let me see if I could, my takeaway is that your market in upstate New York, Buffalo, Niagara Falls, there's a supply and demand imbalance, meaning the demand for housing is greater than supply of housing. when it's economics 101, when demand is greater than supply, it put upward pressure on homes, housing prices, upward pressure, appreciation wise. And of course, in terms of renting, there's always a good percentage of people will always be renters, like you said, and they need a place to rent. People need a place to rent to live. So the rental market is consistently very strong in your market. So we got that dynamic itself, and it's a good sign for the future of your market. So if investors buying your property, their expectation are they're going to get increasing cash flow, increasing rent, a little bit of cherry on top with appreciation over time. But at the end of the day, hey, if you buy multiple properties, like many investors that come into your network, uh, just do the math, right? If you buy three, four, five rental properties, if you hold it for 5 or 10 years, you're gonna you go your wealth building strategy is gonna be very, very attractive for your financial freedom goals for your retirement. So I think so. What else we can say about your market before we conclude this presentation? Anything else you need to add?
I mean, I would just add almost like a little bit of real estate in general, even just uh especially for a lot of your clients tend to finance properties. So with financing, leveraging is so huge, especially like for instance, even if your cash flow was like zero, say you buy a property now and everything like you just own a house basically in 30 years. So if you just held on to that in 30 years, the housing value of that property, like say you made $0 somehow, whatever your value, you're going to own a bunch, like say you did that leveraged and bought like 10 properties. Now you own 10 properties free and clear that have all gone up in value and you just have this like massive wealth. That's why most millionaires in the United States have made their money in real estate. And you could look that up. Like real estate is like to me, you're getting a tangible asset, and it's not like you can have so much of a bubble. Markets can have bubbles, like for instance, like in Texas, but like as far as real estate goes, everyone needs to live somewhere. So it's not like in the news today, I was just reading about like AI and how they're calling it now a bubble now, or even how like gold has gone up. At like a lot of these, I've seen them go up so much that they have so much downward potential too that I'm seeing at least. That I wouldn't. I mean, I don't. I put my money where my mouth talks. I don't have any investments in the stock market anymore. I sold everything on there. I'm solely invested in real estate here. So I love real estate here, and I think it's a good bet, especially long term for your future.
I could not agree with you more, Caleb. It's just you scale the portfolio, you get the cash flow income, you invest over time, and everything will work out. Real estate is the best asset class in the world, especially when you have the ability to do leveraging. So, but for Niagara Falls, in your market, your amazing wholesaling system you have off-market investment opportunities. Is a tremendous value add. It's just we can't take it for granted because it's very, very hard to find a turnkey provider in any market in Midwest where you guys have been doing it for so long. I mean, I have no choice but to. I don't have any other Midwest market turnkey provider because I don't need it. I trust you guys. I mean, how hard is it find to research the right high quality, honest turnkey provider in other Midwest markets. So I've done my research in due diligence. I feel comfortable. Our investors have done well with you. So you guys have done a great job. I mean, long term, you guys are multi-generational. You guys been around for the next generation, and you grow along with our investors. When our investors achieve retirement and when they pass on, the property their children can inherit, you guys can manage, you and your young core team of siblings gonna manage the next generation of losing the properties that the that we bought from you currently, right? So it's just what amazing service you guys are providing. So that's pretty much I have to say. Any final words before I let you go, Caleb Canazzi?
No, I mean, I would just say if anyone has any questions or wants to talk more on it, just reach out to me. I'm always available.
Sounds good. I'm very excited. We should do this more often, do more updates more often, and I'm going to encourage more investors. Hey, I mean, don't overlook your market. Don't just go beyond the paper. Don't go beyond the look of a house, but you have to look at the deep dive into your market, deep dive in the houses you guys promote. It really have a very resilient, it have a long-term good value. Thank you so much, Caleb Canazzi from Buffalo Turnkey. Have a nice day.
Yeah, you too. Great talking to you as always.
All right.
All
Bye-bye.
right.
Mhm.
Bye.